Hey guys, Mike here. So, oh boy, what a roller coaster day. As I told you, Jerome Powell was speaking, and I'm going to blow your mind with something today because I'm actually going to show you exactly why the market sold off exactly at 12:56 today. We had that big U-turn in the middle of him speaking. And so I'm going to show you that chart. It was crazy to me, right? And I'll just show you how algos absolutely run the market. They think they make up 92% of any executions or trades or anything out there. And so I'll show you that. We'll go into some couple things that actually happen. It's important. A lot of you guys have been asking me about oil stocks and stuff and why that is. I'm going to show you exactly why some oil stocks are doing something they've never done before, right? And why people keep buying these stocks and stuff. But, you know, obviously we'll go into earnings and something, a chart is very important to watch here, by the way. I found this today, and I mean, it's pretty crazy. So we got to watch and track this because we could see exactly where we're going. And I know things are kind of off this year with shutting down the world, as Jerome Powell said, and you know, it threw a lot of things off. But this one, you know, I'm definitely tracking this one hardcore because anytime you can find something that can tell you where you're going in the market, it's not something you want to ignore, right? And so let's go ahead and get in here. Let me see if I can kind of blow your mind here, right? So this is the market before Jerome Powell spoke. A lot of red, a lot of flatness, nothing major, right? Microsoft has some good news about AI or something they're doing with Bing, I believe it was, their search engine. But then again, the only stocks that were really up was oil stocks because BP bragged about making a lot of money again. And I'm just going to read this right off so you can say, okay, this is the headliner of what Jerome Powell said, right? So here on the right with the bullish camp, here's the bearish, right? So disinflation. We're in a disinflationary environment. Check. I say that's bullish, right? Further rate increases are needed. I don't know about that one. Bearish, right? We'll take a couple of years to get down 2% inflation. I would consider that kind of bearish, right? A couple of years to lower the balance sheet, but you're gonna say, oh wait a minute, they're gonna keep rolling it off. But they're not actively looking to sell anything. Okay, they're just gonna let it roll off, which can take forever. And so honestly, market likes that, right? And I'll show you. Fed does not want to surprise the markets. Again, so if you're really looking in the bullish and bearish camp, what he really said, and I'm not going to say bullish, but I'll say at least more dovish and not as hawkish, right? I mean, yeah, I hope we can agree on that. And because remember, the market, I mean, the bar is low, right? The market is like, oh, anything bearish, we don't want to hear about it, right? But he didn't really say anything new, but he just kept re-emphasizing the same way he did in his other speech, disinflation. Even though he said he's not seeing it in the housing market or the service sector, which 70% of our GDP is the service sector. So that's kind of interesting. I'm not sure how they make that work. But here's the kicker. So I posted this in Discord. And I was like, let me show you how much algos run the market. Make sure you pay attention to this tweet I'm about to share and the time on it with these crazy moves. And if you look on here, here's the algos, right? As soon as he mentioned disinflationary right here in this area right there, see what the market did? Absolutely skyrocket. This is the Qs. 1.8% in 22 minutes. And then I want you to pay close attention right there at 12:56. See it? 12:56, the sell-off starts. In the middle of that, he mentions a strong labor market might cause the peak rate to go higher. They really hated that, by the way. But remember, we're already selling off. And then, of course, a little later on, we rocket on up again. I mean, these swings were just unbelievable, right? Almost 2%, and it kept going for the day. Now, 12:56, key time frame. Algos run the market. Check this out. Who caused that sell-off? No other than our friend Jim Cramer. 12:56, he tweets out, I reiterate, it is a bull market. And bam, sell straight off at 12:57. Again, could be coincidence. I think not. It's the same thing I showed y'all last year, and those who knew you weren't around, with Kathy Woods, right? Anytime she put out she bought a stock, anytime she mentioned she bought a stock, that stock was obliterated. I don't care if it was on an upswing at the moment or not. They got destroyed, shorted to the hilt. Okay, and so that's just, remember, algos are programmed. Yes, that's why I show you. I don't show it to you for my health. Those 1 and 2 minute charts of when Jerome Powell is speaking and certain words he says, like they are programmed to pick up on that kind of stuff, right? And so again, if you can show me something else that happened at 12:56, maybe another Chinese balloon got shot down. I don't know. But that right there, to me, whatever, some algos kicked in, it didn't care. I mean, you see it sold right back down, and then boom, off we go, right? So maybe somebody else put another tweet out. But yeah, I mean, that to me just it's stunning to see what's running the market, right? I mean, that's just nuts, and obviously not very healthy for the market. But anyway, it's like a roller coaster, right? And so some things to keep an eye on here. One is the S&P on the bigger time frame. This is the weekly right here. It's coming right up against the 100 now. It's already passed the 50 a couple weeks ago. And by the way, the Qs just closed above their weekly 50 moving average the first time in a long time, it feels like. And so it's sitting right up against the 100. We'll see if we get rejected from that, see if we're able to get over it. Obviously, getting over it and closing above it will be bullish. Getting rejected, which definitely happens a whole lot, will be something to watch out for. And then getting into Tesla. So Tesla here, you know, look at this chart right here. What do you see? All right, up and down, up and down. When I look at that, for me, I see coiling. All right, it's coiling up. It's just like a snake, right? And this has been going on since the 2nd of February. Just staying right there in that zone we talked about. You know, the market makers will not let it above 200. It keeps sniffing it and then selling off or whatever. And, you know, when you're cooling up, doesn't mean it's going to go higher. It could go lower, right? I mean, this could happen, right? Just because something is contracting don't mean it has to expand going up, all right, to be very clear. And understand the reason why I say that, look at this RSI. This is the daily, and it keeps getting more and more overbought right now. Now, again, usually when this happens, you know, you usually get some kind of, you know, not quite a sell-off. You get some profit taken, you know, people securing some money there, whatever. It could be minor. But look at this. Look how far overbought this was. I think it was 95 on the RSI. So it could pull one of these. Absolutely could pull one of these. But for the most part, Tesla tends to come up in about this area and then just pull back slightly, getting ready for another move up. Or, you know, because we're in the, obviously, market we're in now, you get an absolute huge sell-off or something. And the big thing I'm looking at with Tesla is, you know, right now it's consolidating. Will it end up moving up or down? I don't know yet. And this crazy market we're in. But really what I'm looking at down the road is this trend line here. If we can break above 200, and I've showed you on the options chart that once you get past 200, you could go 220 pretty easy unless a lot of options get bought up on the call side. But this is anywhere between 225, 245. This trend line is depending on when it hits it. But to see if it can break through, as you can see, it's rejected multiple times, right? And so, you know, it really don't mean a whole lot of nothing until you get above this trend line. But that's what I'm looking for. And again, that's probably at least a couple, if not a month down the road, we'll see. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And so let me know down in the comments what you think of stuff and what you're doing with Tesla. But you know, the other one I want to talk about, as you guys have been asking about, is like oil stocks. Because you're like, man, I don't understand. Like, oil's going down or just trading sideways. But these oil stocks keep going up, right? They keep, and more importantly, they keep holding up really well. And some of them, a couple of them are doing something they've never done before. And what I mean by that is, you know, breaking trend lines that they've never broke before. This one right here on Chevron, for example. Now, this is the third time it moved above it. And if you look back here, this trend line goes all the way back where it's been rejected multiple times, all the way back to 1997. Long way back. And now it is finally breaking above it, not once, not twice, but 3 times, okay? And so, you know, we move over to Exxon, another trend line. It's breaking above it multiple times. And if we scroll on back, get the weekly here, you can see it's been rejected multiple times, and this trend line goes all the way back to 2007, and it's finally breaking above it multiple times at the same time. While what's happening to oil, right? It's just been crushed, and right now I guess the floor is 70, but just hanging between like 70 and 80ish, somewhere in there. But because we're buying it back at 70, at least that's what the president said, I guess that's going to be the floor for oil for a while. And understand, here's why this is happening. I put this in the morning brief this morning. It just happened to come out from Occidental Petroleum. Their CEO said this right here. Occidental Petroleum may redeem Berkshire Hathaway's preferred stock this year as the oil giant prioritizes share buybacks over production growth. Did you get that? Prioritizing share buybacks over production growth, says their CEO. There won't be a significant growth from us because there's still a lot more value to be gained for us by continuing to focus on delivering value to shareholders through share repurchases. I.e., we are going to keep oil prices as high as we can, as long as we can, and squeeze the consumer for everything we're worth, because, you know, that's their job, right, is to give it to the shareholders, right? And so that's what's going on. So if you're ever wondering, like, I don't understand what's going on, that's why people keep saying it's a good investment. It's a good investment. They keep buying and buying and buying because they realize these oil companies, trust me, they've all got on the phone with each other. Hey, you gonna try to produce him? Nope. All right then, click. And so they're all good, right? It's called a cartel for a reason, not them really, but I might as well put them in there. But that's their job, okay? Not to make sure gas is, at a certain price or anything else. And so, and they're going to continue to do it. That's what they're telling us. They're going to continue to do it for as long as they possibly can get away with it, which at this point in time, there's nothing to stop them. Okay. And so just FYI on that one, again, let me know in the comments what you're doing on that one. And congratulations to all you got in the oil stocks a long time ago. And, going into earnings, I mean, tomorrow, the big ones people are going to be looking at, Uber, CVS Health, Wendy's, Dominion Energy. Can't wait to see Walt Disney. Are we traveling like crazy? Affirm, are we buying now and paying later like crazy? Robinhood, who knows what's going to happen there. I mean, they've been losing users like crazy. And then you got MGM Resorts, so are we still gambling like it's going out of style? And that leads me into this chart I wanted to show you, right? That what do you see happening on EPS? A lot of companies are missing by like a mile, 50% miss on EPS, which is not good, okay? And the earnings just aren't great. The forward guidance isn't great or anything like that. And so that leads me in this chart I found today. And you can see right here, so forward EPS growth is now negative for just the 5th time since 2000, so in 23 years. So it doesn't happen very often, right? And it goes below that line right there. That's what I'm talking about. But you can see, if we go back over and look, this is coming down in the 2000s. But guess what? The stock market's going up. But look what happens when it crosses that line. When it crosses this line right here, that's when you see the stock market head down pretty fast, right? So again, eventually this catches up. We start to head south. But, when it crosses that line, bam, big drops. When it crosses the line there, and it barely crossed it. But when it did, because you see as it's dropping, the stock market's going up right there, right? We're on a huge bull run right there. But then when it crosses that line, nope, get a nice little dip in the market. Again, right here, it didn't happen. But it happened in 2020. As soon as it dropped below, market fell off a cliff, right? And now you can see to the right, here we are, just going to cross. Are we going to continue to cross? We'll have to see because the EPS has been horrible. And so you would think, looking at that, it's not just about the EPS. That's just one component. What causes the EPS to go down? What causes it to go negative like that, right? That's what you got to look behind. You got to pull back the curtain and say, what's going on? And so as I put out a members video today, because one of our members, and we have a great community, by the way, shares some, which I believe is extremely important. So I scrapped what I was doing today to do that video for them, because we're going to start tracking something to do with liquidity, because that's what drives market sentiment, liquidity, stock buybacks, and right now it's company cutting costs, right? You saw that. What was the company report this morning? Oh, I'm sorry, yesterday, Pinterest, right? Down, what was it, 15% one time? Got on the call, did what Facebook did. We're cutting costs, which means we're cutting people and health benefits, and we're buying back stock. Okay, then. Huge reversal, right? And that's what they're looking for, right? And so, but that's, it's not just the EPS. What's causing the EPS, right? And so to be negative. And so we'll have to see. I mean, and if, liquidity and stuff is supposed to do what it's supposed to go down because it's supposed to, then you should see EPS continue negative, which means you can see the stock market turnover again, right? We got to watch it, got to track it. But again, it's a picture's worth 1,000 words. That's what I like to say here. And really looking at tomorrow, guess who's rolling out tomorrow? FOMC, baby. FOMC, right? You'll have, wholesale inventories. The market's not going to react on that at all. Crude oil, I mean, I don't think nothing's going to be said there that's going to make any big difference. Guess what? They're not producing anymore. And then another FOMC member. So they're rolling them out in droves. The market really doesn't care. I don't think the market's even reacting to these people anymore. I think they're just talking to, somebody who's just got some earmuffs on going, whatever. We're following the liquidity. We're following the sentiment. We're following the companies that are, doing layoffs, cutting costs, and buying back their stock. That's basically what you're seeing happening right now. So, let me know in the comments if you think I'm wrong on that. But at least that's what I am seeing, okay? And so, hope you got something out of it. Hit the like, subscribe button if you did. Share the video. Really, really appreciate it. For those who have not done, if you could search Mike Jones Investing and just click on the video, that would be fantastic because it really does help out with the algorithm. And I am really, really grateful for that, okay? Again, if you want to join the community, hit the link down at the bottom right there in the description. Less than a McDonald's combo for a reason. And I bet, trust me, you'll get your $7.99 worth a month. I promise. So anyway, have a good one. I'll see you tomorrow.